And I hope
on your phone. This is a new regulatory measure passed by New York. DraftKings, among 3 other companies, now can do this, now can offer this. It rallied about 4.7% on the news yesterday. That rally is continuing in the pre-market session this morning, up 2%. And finally, GameStop, really the big pre-market mover. It is a meme turducken of a meme stock offering NFTs. GameStop, according
You pay in Ethereum if you win. We do it kind of like the way DraftKings does with the Millie or with the single entry for DFS, and it's going to be brilliant.
Interesting. So you see a real estate play in here?
Oh God,
You
yeah.
think GME gets back to prior highs?
No, well, that's hard.
Next, go ahead, Tim.
Look, DraftKings, the same secular story of a year ago is alive and well. It's had a brutal run. Back in DraftKings.
Back in on DraftKings. How about you, Pete?
I've loved energy for the better part of a year. I'm going to love it this year, too. I think energy's going higher, the XLE.
Off to a great start, up 1 year, 48%. How about you, Steve?
Brother Pete almost talked me out of this final trade. Tilray, it's a very expensive option. I think the upside.
Launch their mobile sports betting apps. Caesars, DraftKings, FanDuel, and Rush Street Interactive will have the first go at it. The timing is great news for these operators because they got approval ahead of the NFL playoffs, ahead of college football championship game, and those approvals were expected only closer to the Super Bowl, so they're beating them to the punch.
Bright and early tomorrow morning, Caesars Sportsbook, DraftKings, FanDuel, and Rush Street Interactive. It's set to bring in big bucks. The locals estimate sports betting could bring in hundreds of millions in tax revenue. CNBC's Contessa Brewer dug into the impact for fans and casinos and the state. Hey, Contessa.
Hi there, Chef. Yeah, tonight in
last year and was talking about how he's been shorting DraftKings because he just says it's such an expensive acquisition proposition to get these customers and keep them that makes it a couple of years in many cases before states are profitable once they come online. I just wonder how long before you think New York will be a profitable state for you when it comes to the sports book?
Do have an advantage, right? They already have the infrastructure, but DraftKings has a deep war chest. By the way, FanDuel's got the majority share right now. Another one to watch is a SPAC. And it's called Sports Entertainment Acquisition. We introduced it on our show. It's run by Eric Grubman. He's a former Goldman Sachs M&A banker, and it will be soon known as Supergroup. Its whole purpose is to...
That we're going to talk about today. We're going to talk about DraftKings. And DraftKings right now is trying to make a comeback.
What stocks do they own? They own DraftKings. Like, you know where they are. And so from that standpoint, I don't think sentiment is bad enough to say this is the bottom. I really don't think there's been enough damage. I think there are still market caps that are 20 billion that are on their way to 10 billion, and we have to just sit through that, unfortunately. We have to watch
24 months if you want to get in on that one. All right, DraftKings taking an absolute beating, and the worst part about the beating is that football season doesn't begin again until, September of next year. I do think DraftKings gets back to the $50 level. Unfortunately, it won't be based on fundamentals. This is a momentum stock, and it is based on revenue. I think they hit their revenue numbers and do some, throw in some surprises maybe that we didn't expect to come. This is a much, much more loose.
Movies and Pops. It's just digital now. I even went on DraftKings, which now sells NFTs, and I bought you a horror movie collectible. I bought Saw Chapter 1 for $16.50. Now you own an NFT.
You just wasted money.
Now you, out of 200 people, own it. Now you can sell it when others buy the remaining. And it becomes a commodity.
This is DraftKings. As you can see. So DraftKings head and shoulders played out to perfection. We got the left shoulder, the head, and the right shoulder, followed by the breakdown. The breakdown was very slow, very steady. And then when that neckline broke, it went all the way down to the ground.
Let's take a look at that data. Yeah, it's like freaking impossible, man.
DraftKings wasn't that hard, actually, relative to you can't even use the other apps.
I got left behind.
Yeah. It's not too bad, right? No, but MGM just bought Cosmo, and we were at the Cosmopolitan, and Cosmo's one of the best properties on the Strip by far, and it was huge score to get Cosmo and their clients and the casinos. it's such a huge advantage over DraftKings where it's like sort of like I sign up, I lose, and I move on. But with MGM, you go to the hotels, you go to the shows, you go to dinner, it all comes in with the app and all your credits. So you're like dumb if you go to Vegas not to use the BetMGM app because you get all the credits for your MGM, which is
sports betting stocks, the laggards well off their lows. DraftKings right now, I can see that it's still in the negative, off by more than 3%. And over the last year, you can see off 64% for the past 12 months, matching Penn's 12-month decline. DraftKings expected to close a deal this quarter, perhaps within the next few weeks, with Golden Nugget Online in an all-stock deal. A set number of shares awarded when the stock was trading in the 50s. Imagine how frustrated these GNOG shareholders are with DraftKings plummet. But Tillman Fertitta will have more than 13 million DraftKings shares, and he just told me, if you own these names, you should be a long-term holder, not trying to get out of it short-term. Rush Street Interactive, among those with first mover advantage in New York State. We've seen how this state is killing it. Down now, you
doing a two-team parlay, or they're trying to buy points that you can do on DraftKings. But David, as far as owning stocks, they never knew what it was. They just knew that you could break Melvin Capital.
That's having a horrible year again, by the way.
Is he really?
Yeah.
What is that about?
There's the opening bell and the CNBC real-time exchange.
Trading here in the U.S. One mover to the upside is DraftKings. Got upgraded to overweight at Morgan Stanley. $31 price target. That stock is trading around $20.60 this morning, up about 6.6% before the bell. I'm sure a lot of sports bettors are gearing up for the NFL Conference Championships this weekend. Another mover to the upside, Texas Instruments. It reported after the bell yesterday, gave a
Doing that, if you're just using the headlines, you got to go right now to DraftKings or PennNat, because they'll give you money even if you're wrong.
But do you think it's the humans that are doing it, or do you think
you make money?
Is it the humans or is it the robots that are playing these headlines?
The robots write the headlines. The stock come down.
Who's the anti-Cathie Wood? What?
Hey, well, no, I'm saying the DraftKings upgrade today makes sense to me. Down to 20. It fully now discounts the fact that New York is not that great. Now, obviously, the deals to open accounts are just horrible for the bottom line. But now it's fine. Price matters. You can't just stand there.
Checking on some individual market movers right now. Shares of DraftKings are having a strong day on the heels of an upgrade at Morgan Stanley to overweight from inline. The firm saying the U.S. sports betting market is likely to be very large with only a handful of winners, and it does see DraftKings as being one of those leaders. That stock up 5.4%. Consumer giant Kimberly-Clark dropping today. The company did beat on the top and bottom line, but issued weaker guidance, especially revenue guidance, saying it expects inflation and supply chain issues to persist this year. That certainly hurts when you're making
with some of the swings that we've seen to about 7%.
Changes and shifts, and we'll have 2 more months of reports. Okay, DraftKings. So Morgan Stanley upgraded DraftKings and projected the sports betting stock can rebound 60%, which is what I refer to in the title of this video. But DraftKings is a stock that has performed horribly since the start of September, to be a very large and profitable market in the US, with eventually only a handful of market share winners. We expect DraftKings to be one of them, and with sentiment at an all-time low on near-term loss concerns, we see now as a good time to invest for the long term, Allen wrote in a note to clients. Allen noted that high barriers of entry and the high levels of marketing and promotional spending needed has driven what he calls very, very simple analysis here. My thesis for DraftKings is that you have in DraftKings one of the winners in a very big winner-take-all, big emerging industry. There was a nice piece from sportshandle.com and Bloomberg which showed how crazily fast this industry is growing right now. You look at it before the pandemic, you had sports betting getting slowly legalized and growing in certain markets, but then the pandemic pacing the growth in retail on-site betting, which again, the DraftKings market is that mobile sports betting market. So anyways, if you're talking about a rapidly growing industry and one that's just really now starting to emerge, well, the smaller pro, I also like that they've been able to adapt to trends. The DraftKings NFT marketplace sold 20 million plus in gross merchandise value within 120K primary and secondary transactions in Q3. And in sports, I would argue that there's a lot of collectible value to NFTs. I would do. So I guess the question is, would investors rather have DraftKings not try to establish themselves in new markets? If it takes 2 to 3 years to become profitable in each market and DraftKings consistently adds new markets, well, you're gonna have a lot of upfront costs weighing down the overall profitability for a while. But once all of them are established and you continue these market share percentages, you have a cascading business model. It seems like the logic behind hating Of course, you do have that risk of, well, maybe DraftKings takes longer, and that's what is scaring investors when looking at these numbers.
Like, look at these stocks: Shopify, Palantir, DraftKings, Twitter. You know, some of them were, a lot of them ahead of themselves. Yeah, I guess the whole index was. But you look at just the top bracket here, 8%, 6%, 6%. A big chunk is in this top 10, and these are high-quality companies that are going to grow into their valuation.
Shopify, high PE. Palantir, high PE. DraftKings, unprofitable. Twitter, unprofitable. PagerDuty, unprofitable. And Fate Therapeutics, unprofitable. So that's where you get into the scary stuff. The top 5 for Cathie Wood and the ARK Fund, it doesn't look that crazy.
Galactic or DraftKings, those companies, they'll do well or not do well the same way that Amazon or Google or other companies have done well or not done well. But those are companies. A SPAC is a trust of treasuries. And if you sell for that, you get your cash back before the deal is announced, or before the deal is consummated and the SPAC de-SPACs. It's a
area code. Matterport, nothing before earnings. SoFi, nothing. DraftKings falling into the close.
More after they got sold.
Which, of course, is what Caesars and BetMGM, FanDuel, DraftKings, all the others.
Sponsoring lounges and stadiums. You have owners now investing in businesses like DraftKings. You can even bet on whether Joey B is going to complete his first pass in the game on Sunday. So it's definitely something to watch.
You can bet on the color of Gatorade that is dumped on the coach after the game. You can bet on everything. I grew up
in the global sport business. Guests include CEOs of DraftKings, FanDuel, and Crypto.com. And we'll get U.S. consumer sentiment data at 10 a.m. New York time. Matt, just how worried is the consumer about inflation?
Yeah, well, pretty worried, I would say, but we'll definitely get a data readout on that. Jim Bullard is worried. He's calling for accelerating rate hikes after the U.S.
We get another stock, last stock for today. That one is DraftKings. Next week, we got some earnings on.
Percent of it is happening online and on phones with apps from companies like DraftKings.
As soon as we opened up and launched that mobile app, we saw the traffic spikes.
The floodgates opened in 2018 when the Supreme Court struck down a federal sports gambling ban. Now, gamblers in a state like Pennsylvania spend hundreds of millions of dollars each month.
We need to keep them there to extract more from them.
Betting company DraftKings says it protects its players.
If we see patterns of play that are troubling, and if we've already tried to direct people towards resources or towards limiting tools and they're just not using them, we'll put restrictions on the account.
The NFL commissioner once opposed legalized sports gambling.
The sportsbook world. My bets are on DraftKings. It's a slightly different stock than I talk about normally on this channel because it is not profitable. And if I didn't already own it, I would probably not invest in it today since the market pullback, just because it is not printing a profit. However, this is a company that I use. Had their SPAC or IPO or whatever during the pandemic. I did buy into DraftKings at that time, and I will be adding just a sliver of shares here. It's all about revenue growth, and you can see these numbers down here. If they hit 1.27 billion. We will find that out on February 18th, which I believe is next Friday.
Companies just watch and hear what they have to say about their business. Not as important as Caterpillar, because Caterpillar is huge in the construction segment.
Case actually, when you look at pre-market trading, DraftKings, one of the big ones, of course, is actually moving lower. It's down by about 2%. So giving back some of those gains. But of course, it is a broad risk-off day. There's only a handful of stocks actually in positive territory in early hours this morning. One that is in positive territory, though, is Splunk. This is after the week.
And Sunrun. Now on Friday, you've got DraftKings and John Deere. So the king of drafts is another growth company that has been getting no love. Recent launches in New York and likely new ones over the upcoming years will take center stage on DraftKings' growth trajectory, and it seems likely that today's Super Bowl could drive some user growth. Their big issue is they haven't been able to get the cost to acquire customers under control, and so I'd like to see some progress in that direction, and I'd like to see some growth trajectory projections for these new states.
More than twice as many in bets as last year's Super Bowl. DraftKings told me it's paid out more than $175 million on the game. Caesars told me its prop bets fueled far more of its betting volume than in past years. And FanDuel told me Odell Beckham Jr. was the favorite bet to score the first touchdown. He did just that. And FanDuel paid out $4 million on that one touchdown alone.
Involved in genomics. DraftKings.
Hey, I gotta say, I like this interview, man. It's this is serious. Like I was not expecting this. I was expecting them to, kind of softball it in and kind of like, because that's usually what they do when Cathie Wood comes on. I'll tell you, man, this is
Your ads are everywhere. You can't really go anywhere without seeing a DraftKings ads. That has to be adding up with regards to costs. How do you keep that under control, if at all?
A very strong ecosystem that we built up around DraftKings.
Jason, I can't help but ask a little about your NFT strategy here and what it gives you. How is that working for you, and are you seeing any signs of success?
That's well off of its high. Look at that, 77.5%. That takes us to DraftKings, which is another stock that's absolutely getting hammered today. You take all three of those in context of the greater Cathie Wood story, and I'm wondering what you make of it and the conversation that we had yesterday, in which I know you heard all of it.
Don't have valuation support, whether it's DraftKings, Peloton, Robinhood, but there are some very good names in there. PayPal, Netflix, Twilio. These are companies that have big businesses, and they're back to where they were before COVID, the stock prices. And they have achieved a great deal of accelerated adoption of their platform that's not going away. So
whether it's Facebook or Netflix or some of the high beta instruments, DraftKings, for example, at 15, the 15 puts are trading like $1.20 out in April. So there are ways to utilize this increased volatility and sort of utilize it for your advantage for cheaper entry prices. Because the thing is, in this environment, it's very easy to look at a chart and think that price is.
That's well off of its high. Look at that, 77.5%. That takes us to DraftKings, which is another stock that's absolutely getting hammered today. You take all three of those in context of the greater Cathie Wood story, and I'm wondering what you make of it and the conversation that we had yesterday, in which I know you heard all of it.
I don't know. It seems a little sketch, okay? DraftKings, don't really have an opinion on that. People are always looking for my opinion there. I don't really have one. Oatly, yeah, a lot of growth in Oatly. I'll just give you one quick example with Oatly. I switched from, traditional cow milk to Oatly.
That new investors have bought, whether it's Robinhood, Peloton, DraftKings, et cetera, Moderna, Novavax. So there are opportunities out there. You need to, though, be calm about when you step back in, because we don't know exactly where the bottom is. This is the time to look, make your list, think about at what price you would add to a position or enter a position.
Coin, Tesla, Zoom, Shop, Roblox, and Blade.
If she had bought DraftKings, that would have been good, because Caesars is raving. Caesars, do you see what Caesars is doing?
They're cutting back on
Caesars. This is Caesars.
marketing.
Yeah. It's the end. The giveaways. Everyone who got $500 to Caesars, that game's over. And I think you buy DraftKings on it, and that's a Cathie Wood stock. So I have something positive to say. I'm not just negative. I'm not a negativist. But Palantir, whoa, Palantir.
She did sell more Palantir. That's the one thing she did not buy yesterday.
Yeah, she got that wrong.
All right. All of which leaves me wondering. So what do I do? Do I start new?
Is now 2.71% weight there. DraftKings, that one's a little controversial. That's 2.6%. PagerDuty, this one 2.1%. Robinhood, that's funny. She owns Robinhood, 1.8% there. Fate Therapeutics, 1.8%. The 10x Genomics, that's one of those we talked about, 1.55% there. Roblox, this is now
instead of a casino. So if you treat your account like your DraftKings account, that's all it's ever going to be. This has to be treated like a business. It has to be based in reality.
The sector median. Now, that being said, DraftKings also is missing a lot of things that the sector does offer, such as EBITDA growth, EPS, free cash flow, a lot of the stuff that a value investor would look for. They're not going to find that in DraftKings, okay? So it's almost a bet in and of itself. All right, let's take a look at earnings estimates. But before that, I want to call out this platform I'm using. I'm here on Legal Sports Report. This is a great website. It's a free website that you can read a lot about how states are tracking. Will represent New York yet. We'll start to see those filter in when we get the Q1 results, like of Had some significant wins as number one market share in.
You're getting a little bit of a sell-off on those risk-based assets again. DraftKings, Space, Neo, Cloudflare. We're going to see this pattern continue.
So for example's sake here, let's look at DraftKings stock. So as of January 13th, 2022, the stock had gone from a 52-week high of 74.38 down to 24.24, which is a massive drop of around 67%. He said, it almost reminded me of a statement like an NFL player would make if the teams passed on them in the draft. He said, I hope to make everybody that's been selling off our stock, I hope to make all of them regret that, and it's the worst decision.
So that helps.
That should be good for DraftKings, which...
No, you know what? I'm not DraftKings. I'm not a good person for DraftKings because I have the same...
Yeah, exactly. I mean, Twilio, PayPal, Shopify, DraftKings, Zoom, Block, Square, whatever. I mean, these are names that have been destroyed. I mean, this is the sort of thing at the bargain rack at TJ Maxx. It's not even on the bargain rack. They can't give this stuff away. So I think...
one of the names that we talked about is DraftKings. And so when we look at DraftKings, it doesn't meet our requirement for quality.
The Snowflake up almost 16, MongoDB up that much, DraftKings up 13, 14, Roku. But if you were to look at the Russell 1000, the common circumstance of those stocks that move the most is they're the most beaten up. So let's go to the first chart of Square. And here's why.
More of an appetite for risk. I would nibble at Shopify, DraftKings, Zoom, DocuSign. Those are all stocks that are down over 50%.
Even Netflix is down massively during that time frame. So brand names and tech, to your point, Carrie. So before we let you go, we got a few moments left here. Would you go back to buying big tech like the Apples, Microsofts, and
Wish 17%, Hood almost a 16% move, Fubo almost a 14% move, DraftKings 13.5%, Teladoc 11%, RealReal 11%. Look at ARK today. ARK alone was over a 10% mover.
Really place bets on games, not unlike what you tried to do in DraftKings after the first game, and then the second game, the app didn't work.
Right.
Anyway,
this is going to keep coming up, though. Not just FedEx's
no, it is,
results,
but you know what?
not just questions about their ability to actually expand margins. And I've made this point before in terms of the size of the company.
Right. Does extraordinarily thoughtful work. Go back and look at his work on DraftKings when everybody, including myself, by the way, was tripping over themselves to be long the name. So good for Jim Chanos on this one as well.
Well, I agree with that. First of all, I agree certainly on Jim, but I agree on the concept of this is a company that's really not going to make money.
Growth companies, they're going to lose money, right? So you look at DraftKings and you see what they're doing. It's very smart. And, Jason Robbins is an incredible leader. I've known him for years. And at the end of the day, it's about bringing everybody into the tent. You look what Fanatics is doing, right? They're getting into this industry. Why are they bet peer-to-peer? So I think Jason Robbins and the group at DraftKings, they got an incredible team. Yeah. I think they're going to win. I think they're going to win in the end. But, right now, it's about getting those acquisition costs down. And media, like SportsGrid, is a great place to do it. Our numbers, Joe, are through the roof. Last year, 52 million unique viewers.
I like Jason Robbins. I work for DraftKings. I think that Jim Chanos says it's a great short. I think the time they're short of the stock was much higher. They're going to be a winner, but I think you got to cut that to 10%. That's too much. You have too much in that one stock. Let's go to Jorge in California. Jorge.
Thank you for taking the call.
That's where the excitement is. I don't.
So this isn't like just DraftKings. We should just. But so.
Yeah.
That's what
the answer is yeah. Yeah, that is the answer. The answer is you can't think of AMC fundamentally. You can't think of, hey, what are these guys going to do? Because they probably.
Survey indicates what could be key for future growth for the likes of DraftKings, Penn, Rush Street Interactive, and Bally. Young adults and women could be crucial to growing the sports betting base and those increasing bet amounts. Just today, Jefferies' David Katz published an analysis concluding just because these stocks are cheap, you mentioned that DraftKings is down 30% this year. Well, it doesn't necessarily make them a good buy. With the cost of acquiring customers still top of mind here, Katz picks FanDuel parent Flutter, Caesars, MGM, and its partner in BetMGM, Entain, as top picks for being complete enterprises with the resources to absorb losses. For those wondering here,
7.5% down. Wish stock down 7.2% here today. DraftKings down 6.6%. All these are popular retail stocks.
And sports betting getting slammed today, despite the fact that you've got Major League Baseball's opening day. It's day one of the Masters. The NBA playoffs are coming up. Everybody's gambling. Contessa Brewer joining us. Contessa, literally everybody, or as I call you, Tessa.
We are over the sports calendar. Over the past week, look at DraftKings, declined 16%, Penn off 14%, Caesars, MGM, they're all taking it on the chin on the heels of a record-setting NCAA basketball tournament, an incredible March Madness that included serious NBA action, the Super Bowl of all golf, and the Super Bowl of all Super
Still them falling into that growth category. DraftKings, for example, still isn't a profitable company, one that I own, one that I like long term. But in this market, I think those names are going to suffer. Add on the concerns about the consumer, and I think that's really going to be it.
You know, it wasn't that bad for some of these stocks. Like DraftKings was actually green. AMC was green today.
Stocks that make money.
Yes.
However, I got caught up in DraftKings. I have a pretty big position at $38. What's your advice about my position and the stock?
All right, so Tom, remember, we never care about where the stocks come from. We care about what's going to. They are in a battle, a pure battle to try to get market share. And right now, there is no sign that the battle is.
Back to the channel. In this video here, we're going to be doing a stock analysis on DraftKings. I'm not much of a betting guy. I mean, I don't really watch sports to begin with, so this would be a very interesting business to look at. So we're going to have that with DraftKings just yet. 2 is a pretty horrendous number. Now, this is an industry. So right off the bat, I'm not too impressed with DraftKings. I would just not even look at this company any further. But listen, you watch these videos to try to figure out what these companies are worth. And I'm going to obviously do that for you. But we'll go into a price analysis to gauge what this business is all about and what should you pay for this business. What is an applicable price? But as a long-term outlook of investment, doesn't make sense. Doesn't make sense. But remember, folks, do your own due diligence. If you want the software.
Investor in DraftKings, Pinterest, Airbnb, and he was just named to the Forbes Midas list of the best venture investors in the world for the 3rd straight year. He's founder of First Smart Capital. He's with us live. It's good to see you. Congrats on being named to that prestigious list yet again. It's good to have you here.
Hey, good to see you, Scott. Thanks for.
In the intro here that you were early in DraftKings and Pinterest and Airbnb. Unprofitable tech seems to be thrown out by the market. Investors don't want that at all. How long does that continue?
I think it's going to continue for a while. Even as we look at the IPO pipeline coming, we have a number of companies in the 22 IPO pipeline and getting feedback both.
More gaming. So there's companies like Flutter and DraftKings that are going to benefit.
All right, DoorDash, Melissa and Jim.
I feel like Tim wanted to pick DraftKings, but that was picked up before him. That's just a guess.
Yes.
Yeah.
You felt me.
I felt you, Tim.
Me.
Yeah, I know you well.
Nice pick, Delano.
Dash, Jim.
I like Tony Xu. He's got a lot of character. I think it's an interesting pick, and it's surviving post the pandemic.
Then we have DraftKings. This is the stock that I own. DraftKings, which has taken an absolute beating, plus 111% from the bear case. We forecast legal U.S. betting and iGaming to increase from $1.5 billion in 2019 to $21 billion in 2025.
Profitable companies, we know that. And in this market condition, it's down heavily, but my take on growth companies right now that you like based on the fundamentals and your conviction.
Of those signs yesterday, but we get really mixed signs. For example, DraftKings reported this morning. They reported a beat and they raised their forecast. But one of the big things that was said was the CEO says, we're not actually seeing an impact from inflationary pressures on customer demand. You're getting that in a lot of companies.
Every bit of it. First, it was for stay in place, DraftKings. But now those far exceeded that, Peloton. But now it's just they want to go after the ones that were very good and take them, like the work days. Really great quarter. The larger ones. And, by the way, Tyson Food came out this morning. Now, this one is the first one that's the actual break that we might have.
Kind of the broader sector with hospitality, leisure. Only cruise lines, casinos, and DraftKings score lower than Chipotle. So not only do we not own it because we think the margins are really going to get hit, we actually have a short on this stock.
Up goes Planet Fitness.
Innovation's up 17%, Robinhood's up 31%, Roku's up 23%, DraftKings 23%, Teladoc 16%, Twilio 19%, Roblox 36%. What are we to make of that? Is that where we think maybe this sizable bounce, if you want to call it that, starts, and then it needs some follow-through from some other important names that we'll talk about in a minute? But how do you assess it right here?
With Palantir, I would just say that, I've talked about it 100 times. It's a longer-term plan.
Trash. Zillow. Trash. Pinterest. Trash. DraftKings. As much as I like DraftKings in 2020, I'm looking it up right now, just to make sure.
From guests, including Natasha Lamb of Arjuna Capital and DraftKings CEO Jason Robbins. That all starts today at 2 p.m. in New York, 7 p.m. in London. This is Bloomberg.
Get your opinion on Penn National.
I like DraftKings more. I think DraftKings is trying to put in a real bottom. Let's go to Joe in New York. Joe.
And another phone, you have one phone that's sitting there with DraftKings, and you have another phone that's there with Robinhood, and you're making a bet on the Giants game on one hand and making a bet on crypto or on IBM on the other phone.
Absolutely gorgeous. Look at this. NEO runs up 8.29, Lucid 6.95, DraftKings SoFi. Tesla, what's going on with Tesla? Why did they only go up 1.72 when all the other big-time growth stocks are moving?
They're old market caps, right, and surpass those. And I would say there will be a few of those on that list that will end up surpassing. It's going to take them many, many years to.
Obviously, 9% Tesla, 9% NEO, Lucid 7.6, 6.5 DraftKings, SoFi rolling up.
On an upgrade to overweight at JP Morgan. DraftKings, that's higher after Morgan Stanley said it sees shares more than doubling from current levels. And Airbnb lower after Morgan Stanley lowered its target by more than 31% to $100 a share. So here to help us trade them all, CNBC contributor Boris Schlossberg. He's managing director of FX strategy at BK Asset Management. So
story that's away from the headwinds.
Boris, let's move on to DraftKings, which, if you watch sports television, you see them spending furiously to attract customers via advertising. Sure. They have spent a lot of money on that. This is a crowded space. Do you like it or not?
That's the problem. It's a great business. There's no doubt.
He's lost all his money because he put it all in DraftKings and Penn Gaming stock at the high, put it all at Bitcoin at the high. He's Mr. Talk. But I'm like, investing is actually, you got to do it when it's real hard, like now.
Trading sideways at that point. I want to see if this is the same for DraftKings, different sector.
Step in.
Absolutely.
Not talking DraftKings or FanDuel or any of those. Those are legal in the U.S. Talking here about unregulated, illegal sites that offer gambling.
A lot of people are asking. You can see Lucid up 1933. That's nice. DraftKings finally up a little bit after yesterday. NEO up a little. YouTube crypto is just putting $100 into basically Ethereum. And you can see the last 4 out of 5 weeks, or 4 out of 4 weeks, we're actually up. And as it seems, if you will, that the public out there likes, the DraftKings, the NEO, the SoFi, slowing. Here's the S&P 500 level. And this is what I was talking about, how they believe the market will do and what their advice is at certain levels. Now, a lot of the growth stocks are still doing well. Wait and see how the lockdowns in China.
Tupperware Skills, Thursday Carvana, Beyond Meat and Redfin, Friday DraftKings and GoGo.
The stock's been cut in half. I think it seems interesting. As does DraftKings going into football season. Massachusetts just legalized gambling. To be successful, though, DraftKings pretty much needs every state to follow in their footsteps, and they have to have a lot of groups get together and bet against each other, which they've not done. Now, finally, I put this in, I don't know, for the cannabis aficionados, basically.
Terrible companies. DraftKings is actually not a bad business, but it's also very speculative. Coinbase, it's up and down. NNBC, Plug, Upstart, Workhorse. These are the Reddit titles of 2020 and 2021. They are up in the double digits. What does that mean? Well, let's have a look at what's down. Well, Visa Card, a business with like an 80% gross margin, is down in
the portfolio. All of them green, with DraftKings leading Neo up nicely after they did their numbers. I did a video on that. Are giving us good news. What do I mean by that? Well, DraftKings thrilled as Massachusetts legislation legalized sports betting. So good things going there. Waiting for the governor to sign that. And what about this? This is it. This is the big one, in my opinion. This is California. It's hard to see on the screen. See if we can get it up here. Two of the initiatives right me if this one gets okayed. And we see that happen. And DraftKings is going to be a part of that. Hopefully, moving forward, that you would see California, huge state, tens of millions of people.
Move the market tomorrow is this. Non-farm employment change, unemployment rate, and average hourly earnings month over month. They come out an hour.
That we need to watch out for, including a number of earnings reports. DraftKings is among the companies that is scheduled to give results. And this week's
traveled over the state lines now have the from Massachusetts now have the DraftKings app on their phone. We're also known to be a hometown, Boston-based company, and I think for those who've spending time in Massachusetts or New England, there's very loyal, I think, group of people here who tend to.
The games, are they going to be seeing more DraftKings advertisements? We were just having a conversation about advertising budgets in this kind of deteriorating macroeconomic environment. How much are you willing to spend?
Well, I think what's nice is that in the early days, all of our spend was local, which is inherently less efficient because it costs more.
Stock on this channel before, it was so wildly overvalued, we couldn't even possibly think about buying the stock. But now the stock is down over 61% over the last year, and we're trading at just 3 times sales over at DraftKings. The other thing that DraftKings did is they raised their full year guidance from $2.08 billion up to $2.18 billion. Previous range was from $2.05 to $2.17. Now, in the past, it's certainly been a lot higher. It's been 20, 30, nearly 40 times sales over that company, and that was just ridiculous, even factoring in this massive growth rate that we've looked at in the stock market. They had this massive euphoric run and has given it all back and more, but we are trading towards the top end of a consolidation range.
I love coming out, but we're also having bad days. And so you can see this right here, and I told you the drop in these in just a matter of a couple hours can be big. Green today, and I can't complain about that. Lucid up 5%, DraftKings doing its thing, Tesla SoFi.
And his name is Jason Robbins, and he's at DraftKings. And we are going with DraftKings, who has left this house, and has a whole new address.
House of Pleasure.
Let's go to Dan in California, please. Dan.
Dr. Cramer, thank you for taking my call.
My pleasure, and thank you for calling me by my official name, Doctor. What am I a doctor of, though?
In sympathy with the parent of DraftKings, but customer acquisition for all of these names is still a tremendous problem. And I think the problem for Penn Entertainment is they're trying to solve customer acquisition as a technology problem rather than a sales problem. They've missed earnings 4 quarters in a row, earnings estimates 4.
What were your picks?
I had DraftKings, Kelly, and I also believe I had
Amazon.
I have to go. Yeah, I believe I had Amazon.
Wow.
I didn't even know that. You just made my day telling me this.
Winning it's early.
It's early. Don't count your chickens, as the saying goes.
All after investor Ryan Cohen reveals intent to sell entire stake, and you can see really getting clobbered. The S&P 500 2.25%, 2% down for the Dow Jones, and DraftKings is giving me the biggest headache today. But I do have one that actually is making me money. For those following along with the Patreon, down below, I have one big stock that I've been throwing a lot of money into that is actually green today. We're We're going to discuss that.
Please look for some important partnerships. I got an idea. Why not collaborate with DraftKings to have video gambling on events where you play me or I play you or we play against each other in a group of people? In the end, the decline and soon fall of Zoom is a stunning failure not of company's original product, which was great, but of the inability to imagine. Please look for some important partnerships. I got an idea. Why not collaborate with DraftKings to have video gambling on events where you play me or I play you or we play against each other in a group of people? In the end, the decline and soon fall of Zoom is a stunning failure not of company's original product, which was great, but of the inability to imagine.
And I believe that continues on. The energy I would be a little worried about with a major recession in 2023. These could get hit a little bit. But before then,
huge costs, as you just mentioned, but like at DraftKings, for instance, you're expected to see, margins go from, let's say, the mid to high 30s up until the low 40s and maybe in the mid 40s over the next year or two, as they obviously have acquired many of these customers if they're able to keep them and the economics get a bit better. DraftKings is interesting to me. It's had this nice run off the bottom. I remember last summer reading about a deal that they did with a company called Simple Bet, which is in-game betting. So Kornacki just told us about the odds for teams to win a certain amount of games over the course of the season, or who's going to win the Super Bowl, that sort of stuff.
More interesting way to bet. By the way, it's a lot more profitable for DraftKings or FanDuel. DraftKings is adjusted EBITDA positive expectations for 23, which is huge because the whole story has been a cash burn, an addressable market. Everybody knows it's getting bigger, but these companies that have not been profitable, but they've started to turn the corner here. That's part of the reason.
3 weeks in the Nasdaq down. Powell says, "Oh, easy. Uncle Powell doesn't."
Commercial that's every other commercial out there, seems like it's Caesars or DraftKings or one of these other ones, is really what's holding the stock back. If you look at their last quarter numbers, they had record numbers both on the Strip and in their regional properties. The digital lost less than expected. And in fact, what was once a reason to get very excited.
Cash, no P ratio, I get all that. DraftKings, though, will benefit. They are advertising a lot. Right now, they have a deal. You bet $5, you get $200 instantly in cash. The thing is, I tried doing that, and I couldn't do it. It doesn't work in my state, but it does work in several states. It's a pretty good deal. That's gonna accelerate competition. That's the main reason I don't really own DraftKings anymore. I've burned too much cash for this environment.
Maybe as low as down here to $15. Again, depending on how fast that happens. But if you can firm though higher highs, I actually think DraftKings needs to go from 20 to 23 over the next. Look, it could be over a quarter. It could be over the next couple of months. It doesn't really matter. But you need to get over this group of highs. Then you will have made higher highs all along here. You will be setting up a pattern like this. I think you get rejected at 23, 24. Investors are or they can fundraise, the better. But the more that DraftKings fundraise, the more it's going to dilute you and the more pressure it's going to keep on the stock. So
some Penn National on Friday, actually, as a land-based casino, but has a good online sports betting presence as well. So you can there are sectors to look, but you got to be willing to trade it daily. Our view is
early stakes in Pinterest, Airbnb, and DraftKings is deploying new money into tech companies despite the tough market environment. Rick Heitzman is a founder and partner at Firstmark. He joins us here at the Nasdaq. Rick, great to see you.
Great seeing you again. Great being back on set.
Great to have you on set in person. In terms of rising rates, how does that play?
Entertainment.
Penn Entertainment's interesting. I still prefer DraftKings, particularly if they get California. Why DraftKings? Because Jason Robbins runs this pretty terrific outfit. I used to be affiliated with them. I like the way they work. They open a lot of business. They do a lot of good daily sports. I liked it. I like DFK. By the way, can I just say that I think that this is a season for football that is going to surprise people.
All right, let's move on, shall we, to DraftKings.
Yes. So, DraftKings is the one that I was really picking for being more of the surprise story. And I think they've still had that strong revenue growth story. Obviously, as a growth company that's been hurt incredibly since we started the year. But, they've bounced back a little bit since mid-June, and they've actually held at the total addressable market with DraftKings and the growth story. And I think they still have a strong growth story, as well as the legality that's being, brought into other states.
Yeah, like if California legalizes it and voters will get their chance to look at that in November, maybe, well, it could push off profit. Edition of 3-Stock Lunch, Delano's Dynasty, Amazon, and DraftKings. Which do you think is holding the team together? The answer might surprise you. As we head to break, throughout Hispanic Heritage Month, we are celebrating our CNBC teammates and contributors. Here is Lido Advisors Chief Market Strategist, Gina Sanchez.
And then $1.25 goes to DraftKings because there's some type of licensing rate comes into that. So, yeah, I mean, I don't want to get too deep in on like what the different tiers are, but it is a fun game that you can play without paying any money. Everybody gets a free pack, and no one in Legendary.
So that was cool. That's a cool part of DraftKings. Obviously, there's much more to the company than just Rainmaker, but it's something that's new that you might not have seen before, and it's starting to tie into NFTs. And I think it's interesting. It gives them something unique.
Heavily invested, and I talked a lot about DraftKings. Well, not heavily invested.
Oh yeah, DraftKings. Yeah, DraftKings.
Yeah, DraftKings, Arrival, SoFi, and Snapchat, which all look terrible right now. But
yes,
yeah. Those are stocks that I talked about, made a few videos out in the past. By the way, I don't delete videos. Tom Nash,
good stuff. Yeah. I don't do
but,
it either. Yeah,
those videos talked about those stocks. And I made a bunch of videos on DraftKings especially. And yeah, looking back on it, it looks bad.
Vulnerable.
Well, I mean, you've pulled up a couple of interesting names here. I think one that you didn't actually list is Boyd Gaming. Boyd is right now 3 times levered.
Retail super not interested apparently in eBay over here, MST, DraftKings, Uber, less interest in Hut. You're getting a little bit more institutional buying over here. So quite fascinating, as well as Posh, not getting a lot of retail interest over there as well. But anyway, this gives you a little bit of a look here. Now, VandaTrack is also noticing that we're seeing.
And another big mover we're watching this morning is DraftKings. It is surging by about 8.5% in pre-market trading after a report that ESPN is close to a new partnership with the sports betting firm. Bloomberg has learned the deal would pave the way for the media giant to capitalize on the growing wave of legalized sports betting. ESPN has already invested heavily. Other big movers out there, one of them is DraftKings after a report late yesterday that ESPN is looking at a big partnership with the sports betting company. Really shows the gains in sports betting that is being made here in the U.S. That is just a massively exploding market. And of course, when I talk about on the lineup here on Bloomberg, but DraftKings is up about 8.3%. One mover to the downside and dragging other names with it is AMD, the chip maker here in the U.S., giving a preliminary third quarter figures. Sales coming in $1 billion under expectations speaks to the slowdown we are seeing for demand in the chip space. So AMD is down about 5% and taking.
There's fingers crossed that they hold, and they have. DraftKings, which was up 8.8% at its highs today, finishing with about a 3.3% gain. You know this story. It's on the Bloomberg. Walt Disney's ESPN nearing a large new partnership with DraftKings, according to people familiar. So that certainly got a kick to the upside in today's session. Cano Health also kind of special situations playing out today. News that CVS is said to be in exclusive talks to buy Cano Health, according to
so
people.
My question is about DKNG, DraftKings, and more specifically to do with the rumored ESPN. It was rumored last year as well, and ESPN wanted $3 billion or something of that nature. It's rumored this time that it's a lot better of a deal in favor of DraftKings, and being that it's been down so much, I know growth has hit. I kind of wanted your opinion from here.
Well, I do think we have to worry about this California election. That's the problem. We got to see what happens there. But I think Jason Robins is doing a terrific job. And I'm very much aware that partnering with DraftKings would be a very good thing for any company who's in the media business, because they're all doing so badly. All right, people got too negative, and you saw what happened this morning. But they weren't able to create enough fear. The bears were toothless. After today, we have to remember there are still plenty of people who never.
Plus down, Teladoc, Space, Hood, these are all, definitely were heavy retail stocks, and those just can't catch a bid. Look at the ARK fund today. ARK, the main Cathie Wood ETF, was down today on this massive update. It couldn't even go up. It was down. HIMS was down here today. BlackBerry, break even, Real, Palantir.
Even though everything was 2% up, you see a lot of red. DraftKings, Neo, Lucid, tone on a rate hike pause or pivot will keep the rally in the U.S. stocks going. UBS says, I've shown you all. And you take a look at the big movers for me. Neo nicely up 2.73, 5.85 for DraftKings.
But hey,
overall, big time. Lucid, Tesla down almost 4%. DraftKings getting crushed again. Neo Green, Lucid Green.
Some money. I mean, every time I turn on Fubo TV and watch some football games, man, the amount of DraftKings commercials I see with Kevin Hart in them, like, you know how much you got to pay Kevin Hart to do those commercials, and then you're paying for all these advertising spots. Ooh boy.
Let's talk about the three that I chose, though. Tesla finishing the day down by 3.6%. It is the biggest drag on the S&P 500. Cloud stocks got really hit hard today. We saw shares of Twilio down by double.
What's on your radar?
Well, I'm taking a look at DraftKings. It saw earnings yesterday. That stock is getting hammered this morning, down about 18%. And while revenue came in more than double that of the last quarter or last year this time, and while the net loss narrowed, this company saw unique players that were lower than analysts expected. Now, it was a 22% hike from the year ago. Has been extremely great for this company, for DraftKings. It's football season. It's the most popular sport for wagering. And so this year was a turning point in the online gaming operators. Instead, in recent years, these operators would spend tons and tons of money on advertising and marketing so that they could reel in more people. But they started to cut those ad budgets. Huge metric for this company. When you think about the success of DraftKings, it hinges on the ability to get unique visitors, unique players playing in the games, making wagers. And so if it can't make what the markets expect, then likely there'll be some pullback like there has been.
So that total came in at 1.6 million, which is actually 22% more.
Bottom. We'll talk about that on today's show. What is going on, investors? Hopefully you guys are doing well out there. Time to pick up the story of DraftKings, which reported their Q3 numbers yesterday, and the market hated it. The stock is down over 27% over at DraftKings. Now, clearly the revenue growth number is not what is driving the stock, because the stock has had pretty solid revenue growth for a really long time. But last year was closer to $500 million. All your add backs and subtractions still shows you that your net cash flow provided by DraftKings over the last 9 months is a negative $477 million. This is of straight cash. Last year, it was almost half as much, or about $200 million less, at $247 million.
SoFi actually doing the best, down 2.45. Man, oh man, oh man. Look for value. I always like this because I like DraftKings. Now, I'm going to end up taking a tax loss on DraftKings this year, but it's going to be one of them ones where I wait 31 days, get back in. A lot of the big ones that I have, the growth stocks that got hit real bad, it's going to be one of these: sell, take 31 days, get back in after the tax loss has been realized, and then we're back in. We get a little bit of refund.
With regard to California and where sports betting was on the ballot, where some of those measures in California at least fell short.
You know, I think that sports betting, at least when we think about it, should be informed by what we've seen with cannabis. States are the laboratories.
In general, high-risk retail plays. Think about your DraftKings, your SoFi, and a lot of other ones out there, and your Neos and all of them that have been getting shorted. And now today you have this rally, and all of a sudden a lot of people decide they don't want to short it anymore because they want to see it running up. They want to cover that. So it adds a little gas to that fire.
We had some good things. Then we get down to DraftKings, seeing that with a nice 17% pop, and we'll see how it goes. But at the end of the day, like I said, the conservative was going to out.
It's a deciding factor in that department. So when it comes to DraftKings, there's a lot of dislikes there. The user base, it's really hard to retain the user base in Roblox. If Minecraft was on the public markets, that would be a different story. Robinhood, I do like the
from when Elon's deal for Twitter closed. And then DraftKings finishing the day down by more than 5%. Biggest one-day drop since November 9th. The company moving lower after some customers reported that their accounts were compromised and money was withdrawn. The company did say that it had less than $300,000 of customer funds that were affected, and it